All right, guys, bang, bang. Got Fred here. Thank you so much for doing this.
Thank you. Great to be here.
Absolutely. Let's just get started with Marathon and kind of your background. So Marathon is one of the largest Bitcoin miners in North America. What did you do before you were on the board and then became the CEO?
So 25 plus years running technology companies across a variety of sectors. FinTech was a big one. Matter of fact, my first programming job was at a bank. So grew up really understanding the friction in the financial markets. Had the good fortune of taking some companies public, doing a lot of M&A, and then switched to the dark side, became a private equity managing partner and did leverage buyouts of tech companies, and then started advising really large funds and tech companies. I had known the CEO of Marathon, Merrick, former CEO, now executive chairman, for many years socially. Our kids grew up together. And, I joined the board in 2018 really to help him with kind of this transition to Bitcoin mining and blockchain. I've always been fascinated by blockchain. I think it's a great leveler. If you look at kind of how the internet developed and brought kind of the democratization of information, I think people exposing data on the blockchain is going to change how businesses operate. You can imagine companies like Salesforce who effectively hold your CRM data hostage. If all that data were on the blockchain, not only could you use Salesforce to access it and gain benefit from it, but you could use other applications. So I think we're so early in this blockchain development. Bitcoin, cryptocurrencies are just one part of it. I'm a big believer in the Bitcoin blockchain being a foundation for financial institutions, very secure, fully decentralized network. You can say other things about Ethereum. I think it has some great benefits, but it still is less decentralized than the Bitcoin blockchain. And there's just so much you can do. So I was very excited to have the opportunity to step into more of an operating role at Marathon. And I think now is the time where you'll see the miners become more professional companies. We're real enterprises. If you just look at the build out plans most of us have, we'll be $1 billion revenue companies within the next 1.5 to 2 years. And those become big companies and they need to be run in a proper way with good governance.
Give us an overview of Marathon in terms of just staff, revenue, kind of footprint globally or in North America. Just kind of when somebody says to you, hey, tell me more about kind of the progress of Marathon. How do you describe the progress?
Sure. So progress to date, we just published an update at the beginning of the month. And so we're at the point where we've rolled out close to about 20,000 miners at this point of the 103,000 we're rolling out over the course of this year into Q1 of next year. So revenues are beginning to ramp. And we went in January, bought about $150 million of Bitcoin to put on our balance sheet. We're a very well-capitalized company. We have no debt, close to a little over $400 million of liquid assets today. And we're very focused on just building out our production. So we'll be at about a little over 10 exahash of hash rate come Q1 of next year. We're a little over just hitting 2 right now. Mm-hmm. So I think the growth rate's happening nicely. We're seeing great production of Bitcoin in our pool, which has been great. And we're not kind of crossed this threshold where we're producing over 10 Bitcoin a day, which is great, and marching forward. So we're super excited about our progress.
And geographically, everything's in North America, one facility, multiple facilities?
Multiple facilities. So we have current facility we're building out mostly from is in Hardin, Montana, and that'll have about 100 megawatts. A little over 30,000 miners. And then we recently announced the new facility in Texas, which will be about 70,000 miners, predominantly mostly carbon neutral or renewable energy.
Got it. Let's just jump into, there's basically 3 main topics, I think, that everyone's talking about Marathon. And I always caveat these conversations with the following. One, most people immediately jump to conclusions, right, before hearing kind of the other side of the story. 2 is that when there's controversy, people always think that it's negative impact on a business. So I look at a Robinhood, right? Everyone was like, drop Robinhood, and everyone was yelling and screaming about GameStop and then the halting of trading of stocks. User acquisition for them went up more than ever, right? So like there's this like Streisand effect that occurs. And then 3 is there can be a separation between the kind of philosophy and then the actual application, right? Mm-hmm. And so I think it's most important, just like, hey, here's 3 questions. Like, what is the answers? So let's start with ESG Bitcoin, right? There's some people who believe every Bitcoin is a Bitcoin. It doesn't matter where it's mined, how it's mined. A Bitcoin's a Bitcoin, and they're completely fungible. There is this kind of new conversation around separating or creating premium for maybe a country that it's mined in or a specific energy mix that it's used to mine the Bitcoin. Kind of what's happened so far for you guys from this perspective? And then, like, where are you guys going, or how do you think about this moving forward?
Sure, great question. So we listen to two audiences, the Bitcoin community and the institutional investor community, being a public company. The institutional investors, when asked, do you want a Bitcoin that is green? They say yes. Do you want a Bitcoin that is OFAC compliant? And they say yes. So based on that, we develop plans to try and develop virgin coins that would be environmentally sustained, mined using environmental methods, and that would be OFAC compliant. What we quickly learned, however, was that the financial institutions weren't willing to pay extra for that Bitcoin. So it's kind of like saying all Bitcoin really are the same, but we'd like to be able to say, this is the financial institutions, that the Bitcoin we buy are sustainably mined and that they're fully OFAC compliant. But if they're not willing to pay for that, there's no reason to do it. And so we then reversed our stance, and quite publicly on Memorial Day weekend, I put out a video saying, we're going back to the vanilla node. We're going to develop and mine Bitcoin just like everybody else, the exact same Bitcoin, no different. And yes, we hold all our Bitcoin on our balance sheet. And we're somebody to come along and say, I'll pay you extra for Bitcoin that hasn't been put in any other wallets. I don't think that's going to happen anytime soon, but that could happen down in the future. But I think really the community believes in the fungibility of Bitcoin. All Bitcoin are the same. I'm a believer in that as well. I think that the financial institutions, from a regulatory perspective, need to answer to their investors and to the regulators. And I think that's all going to sort itself out. I think the miners are going to become more transparent about ESG. We're going to become more transparent about what are our commitments. We've already made a commitment that our next deployment of 70,000 miners will be fully carbon neutral, and we'll take the existing fleet that we have, make that carbon neutral over the course of next year. So we'll be 100% carbon neutral, and we'll be tracked and held accountable to that by the public markets over the course of the next year. And then I think it's really going to be a question of how the market develops with what sort of financial instruments people develop. A fund, for example, could say, I'm only going to buy sustainably mined Bitcoin and put it in my fund. And then they could sell shares of that fund to institutional investors. And that's a way to kind of get at the differentiation on behalf of financial institutions without the miners having to do anything other than we're just going to keep carrying on mining our Bitcoin just like everybody else.
So it's fascinating to me that the financial institutions do this, right? And I think this is why the Bitcoin community kind of revolts so heavily against this, right? Is almost this belief that like the ESG conversation is just pure virtue signaling, right? So if you're demanding ESG Bitcoin, which frankly that isn't a thing, right? It's almost saying, hey, I have a Bitcoin, and like, where did it come from? Where was it sourced from, right?
Yep.
To some degree. But it's acknowledging that all the Bitcoin is the same. It's just the production process is different. But I'm not willing to pay more for it. Means that actually they don't put more value on it. It's pure virtue signaling.
Yeah, exactly.
Right? And then I think the second piece is when you get to like the OFAC compliance stuff, right? The Bitcoin community believes, well, the whole point of Bitcoin is that you don't censor any transactions. The financial system is built on literally censoring transactions. And actually they weaponize the dollar and all that stuff. But they're not willing to pay more for that either, right? And so again, it's kind of all virtue signaling. It's all conversation. It's all, I want you to think I'm a good person. But when it comes down to it, we actually see no difference in value between any of this stuff. And so do you think that the conversation goes away? Or do you think that actually the financial institutions like kind of make financial products, or like how does this play out in terms of, we've been able to decipher like, don't listen to what they say, watch what they do with their money. But does that necessarily mean that they won't go after this? Or do you think that like, this is only going to get louder? It's going to become more of kind of a mainstream conversation?
I think part of it is very much virtue signaling by the institutions because they're activist investors are holding them to that mandate. So I think it's not going to blow over. Just the conversation will continue to be there. Miners really have an incentive of becoming more environmentally sustainable. It's the right thing to do, not just for the planet, but for the industry. And what's great about mining in North America is that we have a very good grid system, generally speaking, where you can really purchase electricity based on a blend of power sources. And so you have that ability to be predominantly renewable. You can use carbon offsets for certain things. You can use RECs. There are lots of ways to kind of mitigate the impact you're having on the climate from that perspective and the environment. However, Bitcoin miners and the industry plays a key role for power because we enable a renewable wind farm or solar farm to get into business and provide baseload for us, and then build out their power distribution network. The biggest problem in power today is not that there isn't enough of it that's green, it can't get to the right places. And that's a grid and distribution issue. And 200 gigawatts of power is lost a year in this country just by heat in distribution lines. And you could mine a lot of Bitcoin if you just put that base load on a facility where they're doing solar or wind. And until battery storage technology gets there, I think you're going to find Bitcoin miners are the key drivers of investment in renewable energy.
I've continued to say this, and literally I've had everyone from the climate change folks come after me to the mainstream media folks come after me, et cetera. Bitcoin is probably the greatest incentive for renewable energy R&D at this point.
Absolutely.
Right? It's just the financial incentive to get the cheapest power is literally, as you stated, you guys are mining 10 Bitcoin a day. That's almost $250,000 or $500,000 a day of revenue for just you, right? Not the whole industry. And so you just kind of keep going through. And I think today, $35, $40 million a day in mining rewards around the world, and that's only going to continue to appreciate. Like, there's nothing else that has that kind of pure free market capitalistic perspective.
Yeah, absolutely. I mean, there's some great analogies around Bitcoin being a store for energy, right? When you think about it. So we produce Bitcoin. It's a store of value. You can take that store of value and go buy energy somewhere else if you want. You can go buy whatever it is you want with it. So it's a great store. It's a great conversion of value into dollars. And when you compare Bitcoin to other industries, actually, and you look at the energy inputs and the cost inputs, carbon inputs even, for what they get out the other end of economic value creation, the Bitcoin mining industry is by far one of the most profitable and efficient at converting energy into profits. So I think it's going to continue to be a key part of the electrical power grid question going forward. And I think it's going to grow in importance. But the other thing that's happening in the industry is we're also seeing a huge push for hardware to get more energy efficient. Mm-hmm. So now you're starting to see the joules or the watts per terahash come down, and it's going to continue to shrink, which means we use less electricity for every terahash that we produce. So I think you're going to find that the power consumption of the Bitcoin mining industry is actually going to level off and eventually start declining as the efficiencies kick in.
Yeah, and the other piece, and I've written about it, I'm sure you guys have, plenty of people at this point, is just like the legacy financial system has a very linear relationship between serving more users, more transactions, and the energy consumption. So if I want more users, then I need more energy. If I want more transactions, I need more energy. Bitcoin, not necessarily, right? In terms of just the ability to stuff tons of economic value into a single block and increase the economic value, but not necessarily increase that energy consumption. And so a lot of the analysis that's done in terms of, Bitcoin's going to do whatever in the future, it's just built off a premise that they just don't understand that one simple fact. Talk a little bit about geographic distribution in the mining industry, right? You guys are all focused within North America. Mm-hmm. There's tons of hash rate elsewhere in the world. Is there a belief in your mind that it will stay, pretty decentralized? Do you think more and more of it will kind of coalesce into the United States? How do you just think about where we are today and then how that evolves over time?
Yeah, I think there's obviously a shift going on in China where Inner Mongolia is shutting down mining. I think the jury's still out as to how much mining will actually leave China. A certain percentage will. We're already seeing that. But as the hash rate in China starts dropping below 50% of the global hash rate and North America grows, I think you're going to find that you'll have kind of a 30-40% in Asia, 30-40% in North America, and then the balance in Europe and other ROWs, so to say. There's some great opportunities for Bitcoin mining in the Middle East, for example. Imagine the solar power capability. So, Bitcoin can be mined anywhere you can get renewable energy. You don't need infrastructure. That's the beauty of the industry. And so I think you're going to see a pretty good decentralization going forward.
It feels like, in some crazy way, the way that the Bitcoin system is built ends up with a globally distributed and decentralized system. And the free market does work in this sense, right? Like, we live in a world where every market is manipulated and we argue all day long over should be more or less manipulated, whatever. But like, this is kind of the last free market and it's working.
Absolutely. It's kind of like economics is a bit like water running downhill. It'll always find its way downhill, right? And the Bitcoin market, when you think about it, anytime friction is introduced into the market, it moves around it somehow. And so I think, there's always going to be the search for the cheapest power. There's always going to be the search for highest efficiency. And the market's just going to continue to develop and get better and better, more mature. And people are going to get just more used to dealing with these very decentralized businesses that are created on the blockchain. So I'm super excited about the future. I think it's the equivalent of kind of 1997 in the internet is where we are today in Bitcoin.
Let's talk about Taproot. I know that there was some of this was related to kind of the OFAC compliance and all of that. So maybe just talk a little bit about your understanding of what Taproot is, and then kind of the decision-making process that goes into signaling adoption or not adoption for Marathon.
Taproot enables a couple of things. One, it's an underlying change that will enable the creation of smart contracts on the Bitcoin blockchain. This is a really important thing. I think it's undersold because one of the key developments on the Ethereum platform is smart contracts. It lets you do these DeFi businesses. It lets you really take Bitcoin and the blockchain to the next level. So between what people like Stacks are doing and other companies, Taproot is really going to enable the ability to do the smart contract and the ability to have a contract that is gradually exposed as it's executed, which I think is a key part of that. It also allows for multi-sig functions, which is going to be critical going forward. Why it took us longer to signal, we had to migrate all our systems back to the vanilla core, and then we had to slowly bring all those systems up and start signaling for Taproot. So I believe actually today, as we're recording this, we're most probably signaling the first blocks today, most probably. Okay. So it'll be either today or tomorrow, most probably, based on, you have to win a block. But we've fully deployed it, and now it's just a question of winning a block. So.
Got it. What's up, guys? Bang, bang. I hope you're enjoying this conversation. But before we go any further, I want to quickly tell you about today's sponsor, BlockFi. BlockFi's got 4 different financial products for crypto investors. You can deposit crypto and earn up to 8.6% APY in an interest-bearing account. You can deposit crypto and take out a US dollar loan against your crypto collateral. You can use their cryptocurrency exchange and have no trading fees, or you can get a new Bitcoin rewards credit card. It's a normal credit card that when you swipe, you get Bitcoin back rather than cash back or airline miles. I'm an investor in the business and a very happy user. I think you will be too when you go to blockfi.com/pomp. Again, blockfi.com/pomp. Go check it out and let me know what you think. All right, let's get back into this conversation. I hope you enjoy it. It feels like Marathon is the quintessential example of a business that was started, goes after Bitcoin in terms of the mining, by every measure is a Bitcoin company, right? Mm-hmm. From the philosophy behind it to the team to the business you're actually in, the revenue driven, holding Bitcoin on the balance sheet, converting your cash into Bitcoin. Literally you go and check all the boxes. And then this ESG thing pops up, OFAC and Taproot. And it feels like almost overnight, the Bitcoin community went from that's awesome to literally fuck Marathon, right? And just dump the stock and mm-hmm. absolute, I say only Bitcoin community can do the chaos, by flipping a switch. What is the thought process inside the company when all this is happening? How much of that is noise in sense of hey, we have a plan, we're going to continue with the plan versus no, we're listening to the community and we're trying to understand, how much of it is constructive feedback versus just, people being idiots on the internet, right? Yeah. How do you think through that?
So great question. Initially, we were very focused on who are the buyers of Bitcoin, mm-hmm. institutions, who do we really want to support, what do we think they want? Not unlike any company that's a startup, right? You make your assumptions about what your clients are going to want. When push came to shove, we realized they weren't willing to pay, as we were talking about before, for that value. And the community was very vocal. And I'm a big believer that in these decentralized networks, you really have to do what's right for the community because they do have a loud voice. And it's important to listen to that voice because we all need to collaborate to make this really work in the long run. And I think, every Bitcoin has to be as fungible as every other Bitcoin. And it's just a question of really trying to balance running a business with the right governance and right compliance with doing what's right for the community and the overall growth of the crypto industry and the network.
it's hard to speculate on what you would have done, for situations that didn't occur. But if the institutions had said, hey, we are willing to pay more for this, do you think that you would have stuck to the guns and kind of continued down that path? Or do you think that the community kind of trumps revenue, right? And it's a weird question because you get into this like revenue is the point of a capitalistic for-profit business is literally to get profit. But then there's like the community aspect to it, which isn't necessarily revenue driving, but could be beneficial or hurt the business as well. And so what's the trade-off there, I guess, or the framework to decide?
Sure. So I think one of the key aspects most people don't think about is that there isn't an infinite supply of Bitcoin, right? There are 900 a day. And if one miner starts doing full OFAC compliance, for example, and filters Bitcoin, how many Bitcoin are they really going to create a day? And is that even enough to feed financial institutions? It's not by any practical means. So the economic value institutions could provide to miners for a differentiated Bitcoin, that equation doesn't really pencil today. It's a different story, I think, if a fund were to basically go to all the miners and say, listen, we want to buy only virgin coin, and here are the terms and conditions, and we'll pay you this much more. Miners will then make the economic decision themselves as to what they're going to do. But I think still, unlike the oil and gold industry where you can decide to turn on or turn off your reserves and grow volume that way, we don't have that luxury in the Bitcoin industry. We can only buy more hardware. And then, what a lot of people don't realize is there's a lot of luck in mining Bitcoin. It's not just you're going to do it. You've got to be really good at what you're doing, and then you've got to win the blocks. So you've got to have scale. And I think, if anything, what we're going to see is kind of the market turning into, there'll be a group of a number of large volume miners. You'll have a bunch of mid-tier miners who work very closely with hosting facilities. They do kind of rev share deals. That's how they kind of capitalize their capex. And then you'll have small miners who are really just doing arbitrage on buying hash rate. And I think there's some really interesting markets that are going to develop in this industry around essentially doing derivatives based on hash rate. Mm-hmm. So that, I can decide to buy a couple of terahash on the open market, almost like you do energy credits. Mm-hmm. I think we're going to start seeing that develop, and that's going to create a whole different asset class for institutional investors, because now you can actually invest in the Bitcoin ecosystem and do arbitrage on derivatives that way, which I think is going to be really exciting as more and more financial products around that come out.
I think we're just getting started.
Absolutely.
Right? Two more things I want to talk about is when we talk about community, most of us think of like the internet, right? And that's Twitter, Reddit, whatever else. But you guys sit in a unique position because you talk to the leadership of other mining companies. You talk to, what I'll call the whales or other large players in the market. Was there a difference between the response from the executives at other mining companies or like some of the larger players in the market versus what I'll just call like the internet? Or did you hear kind of similar feedback across the entire ecosystem?
We got similar feedback across the ecosystem. Our peers in the industry looked at us and said, you guys aren't really playing by the good of the community.
Got it.
Yeah.
And it's interesting to kind of think through there, because I think like some of that is unknown, right? Like, how do other miners feel about this? And I guess another piece of the analysis would be if all of a sudden, an institution came and say, hey, we'll pay you 10% more for that Bitcoin. How many of them would have called you up and said, hey, what's the criteria, right? Like, fortunately, I think that didn't happen, but we'll see how it plays out. Second thing is, I think it's called the Mining Council, the meeting with Elon that Michael Saylor put on. Just whatever you can say about in terms of like going into it, kind of what was your thought process of like, we're going to participate in this. I think you guys participated. What were you hoping to get out of it? And then like at the meeting, I don't know how much you can talk about like what was actually discussed, but just like, what did you get out of it?
Right. So preface, I wasn't actually on the call.
Okay.
Our chairman, Merrick Okamoto, was on the call. But going into it, what we really wanted to do was really work with Elon to help him understand kind of what we're doing. He put out a tweet that showed, the carbon footprint, if it was all based on coal, et cetera, of what was happening with power consumption. And so we really wanted to address that with him, let him know kind of what we're doing, and that we are much greener than he put out to say, and then offer the opportunity to collaborate. And while I think he tweeted after the meeting a tweet that he was going to collaborate with us, We'll have to see kind of what he does. I put out an open invite to him yesterday on Fox, and said, hey, we'd love to work with you on the technology. Right? Renewable energy is technology that needs investment, continue to drive the cost down. Battery storage and utility scale storage is a huge opportunity that will benefit every single consumer in North America and around the world. And the Bitcoin mining industry could fund a lot of that because it's helpful to what we're doing. So I would love to collaborate with them and any other technology providers in that space.
Yeah. I forget who said it, but somebody said the use of the word council, right, was probably too not thought out enough, right? And like maybe association would have given a different inclination to it.
Yeah.
And so let's hold that constant of like, forget nomenclature for a second. What is your understanding of kind of like what this mining association council, whatever, is going to do moving forward? Is it kind of like, hey, we're going to meet, once a quarter and we're going to kind of just like help each other with best practices? Is it more of we're going to all publish the same report and with data? Do you guys have Elon's cell phone number and you're going to like, text them whenever something happens? Like how do you kind of just see this moving forward?
Yeah. I don't think we'll be texting him.
He'll tweet at you guys. Don't worry.
Yeah. We'll copy him on a tweet or two, or we might DM him. But, so, the goal is really to provide a forum, if you would, for any miner to basically come and learn, and also for us all to educate the marketplace, not just the regulators, but also the general marketplace about what we're doing. And so part of that is going to be publishing commitments. Here's what we intend to do over the next year. We've publicly said that our next deployment will be fully carbon neutral, and we'll achieve full carbon neutral over our whole fleet by the end of next year. And so we'll be held accountable to that. And, even the small miners to publish kind of, here's our current power footprint, the sources we're using, here's where we're going to be, and then reporting on a regular basis, whether that's monthly or quarterly, that's to be seen. But the mission is really of education and information sharing. It's not, I think somebody tweeted, oh, this is OPEC for mining. It's not. For one thing, the market share of the members is fairly small still in the overall global hash rate. And it's open to anybody who wants to join. The good thing about this industry is every Bitcoin is the same. We don't control the price. The market controls the price. So there's no product differentiation. There's no pricing differentiation. So it's really operational excellence.
And it feels like a big differentiation here is that, as far as I understood from what I've read and people I've talked to, there's no like, hey, we're going to come together and make decisions, right? It's more so we're going to come together and what we're going to do is we're going to agree from a publishing standpoint, like what content, what data should be shared. And it's more so almost like industry standards, more so than it was like, let's all make a decision on an action that we're going to take that has an effect on Bitcoin, the blockchain, the mining process, et cetera. And so in some way, if people can separate out like, hey, let's talk about what internal data we should share versus like, some of the other meetings that have happened in Bitcoin that haven't turned out so well.
Like 2017?
Yes. You guys are basically doing the former, right? It's like we have all this data. We understand our energy mix. We understand, so much of what each other's doing. Like we should all come out and say it because it's going to be overall good for the industry. And so looking forward, you're a publicly traded company. There's not too much you can say, but how do you see maybe like the mining industry in North America evolving? It sounds like you think more hash rate's going to come into North America. It's going to get greener and Bitcoin kind of continues to do its thing. And you guys are just better stewards of mining in, in public markets or kind of how do you think about what you guys are doing?
Yeah, I think, yes, we're going to see greater growth in hash rate in North America, not necessarily because people are moving to North America, just the North American miners are now very well capitalized. Both Riot, ourselves, Hive, and others have now valuations that allow us to continue to deploy and grow. So you'll see that grow. As we get bigger, we have to be better at operating our companies, right? The environmental footprint that we create is big, and it's important that we are good stewards of that. And we have to be good stewards of our shareholders' capital. And so as fiduciaries, public companies have a different responsibility than private companies in that we have a broader shareholder base, different interests. And it's really important for us that we provide our shareholders with great exposure to Bitcoin and help develop the market, but also provide a really great return on their investment.
Mm-hmm. What's the thing that you're most looking forward to moving forward? Are there's like a specific milestone or a certain development in not necessarily even just the Bitcoin mining, but just Bitcoin in general that you're like, hey, when this happens, like that'll be the next kind of big inflection point in terms of interest or anything like that?
Yeah, when we start seeing DeFi businesses launching on Bitcoin, when we start seeing identity management platforms launching on Bitcoin, when we start seeing tokenized ownership of assets launching on Bitcoin, that's when we're starting to see the real mainstream. If you go back to the internet analogy, late 90s, you had to buy Unix servers and write custom software to set up a website, and it was a multi-million dollar exercise. Today, you want to sell online, you go set up a Shopify store. It's super easy. And so I think the Bitcoin industry is moving there. The faster it moves there, the better. And I think we're still in that kind of honeymoon period with a lot of these startups in the DeFi world, where the concepts aren't, fully crystallized. There's a lot of really cool startups working today, some really cool things. We need to make them a little bit more regulator friendly. And then I think as we start seeing them deployed on the Bitcoin blockchain, that's when you'll start seeing mainstream really take over here.
Mm-hmm. Do you have like a message to kind of the Bitcoin community just in terms of like, hey, there's all this like nonsense that happened. It feels like now you guys are saying, okay, we're just going to do what every other miner's doing. Is that like a fair categorization?
Yeah, I think a better way to say it maybe is, hey, we listened, right? We reacted, and we want to maintain a dialogue. Mm-hmm. Keep talking to us. I understand that when you're not happy, you want to complain. But, personal attacks don't help necessarily. Let's have a dialogue. We have said to a number of influencers in the industry, hey, listen, we're more than happy to have a group of people sit down and talk with us and tell us what they think we should be doing. We want that input. So make it constructive. And, I'm more than willing to sit down with any groups in the community and chat, because I think there's a lot we could do together.
The people that you went and told that to, what was their response? Were they generally receptive?
They were very glad. I think what's interesting is, on the one hand, you have the folks who say Marathon bent the knee, to use the Game of Thrones analogy, which is great because we did, right? We listened to the community and we did react. But at the same time, we really want to work with the community to make Bitcoin everything it can be. Mm-hmm. And there's just so much still to be done in this industry. And, I think there's just a lot of people who want to do it. And if we all work together, I think we're going to get there much faster.
I couldn't agree more. Listen, a sign of intelligence is changing your mind, right? Like that's not a bad thing, mm-hmm. right? It's actually a very good thing. And I think that the world could probably benefit from people doing that more often, right? Listening to folks, getting more information, changing their mind. And I think you guys are serving as a great example. Maybe we can all work together and get Elon to change his mind. Who knows where his mind is today, but that would be the hope, right?
Absolutely.
So,
absolutely.
Where can we send people to find you on the internet or find more about Marathon?
Yeah, so I'm at Twitter, FGTHIEL. And otherwise, go to Marathon's Twitter and just DM me on Twitter. I'm more than happy to chat with people that way.
Awesome. Well, listen, thank you so much for doing this. I hope you're enjoying the Bitcoin conference. And anyone who's got questions, just go talk to them.
Great. Thank you very much. Appreciate it.
Of course.